It may be easy to convince yourself that you're perfectly capable of handling the expenses and long-term commitment required to purchase a home, but the reality can be far from it. So it's definitely important to learn what tips to follow and which mistakes to avoid, especially if you're a first-time home buyer. Here are 5 of the best home buying advices to make that big purchase easier. Number 5, make sure you're ready to mow the lawn. Owning your own property comes with the freedom of decorating and renovating in the way that you want to, without having to worry about the landlord increasing the rent, all of which seems quite pleasant in theory. But practically speaking, there's a downside of being a homeowner. You have to do all the legwork yourself. Whether it's mowing the lawn or dealing with a leaky septic tank, you can't ring the landlord to get the problem solved. There's a high chance that you'll almost always have a list of things to get done around the house. So make sure you're prepared for that kind of workload and maintenance costs before buying your own place. Number 4, think long-term. Even if you think you're ready to stay put after buying a house, it doesn't hurt to take an honest look at how secure your life situation is. If you're in between jobs, don't yet have a solid career path, or might relocate for work in the near future, it may not be the best time to purchase a house. Same goes for your personal life as well, which you must evaluate before making the all-important decision of becoming a homeowner. Also, think about whether being in the same place reflects where you'd like to be in the next 5 years. After analyzing these aspects of your life, if there's even a slight chance that circumstances might lead you to move in the next couple of years, well, then it might not be the best time to buy a home until you're 100% certain that you'll stay in the new house for at least 5 years. Buying and owning property works best as a long-term investment because it takes time to break even on a purchase. So make sure you're ready for that kind of commitment before purchasing an expensive property. Number 3, save a 10 to 20% down payment. Homeowners that are unable to pay at least 10 to 20% of the total cost as a down payment are asked to purchase private mortgage insurance, or PMI, to protect the lender from non-payment. Generally, you can stop paying for the mortgage insurance after hitting the 20% loan-to-value ratio, but because of a higher interest rate, it can easily put your finances in a tight spot. Not to mention the fact that you wouldn't be building a lot of equity, since a huge chunk of your down payments would be going towards interest. So, it's always recommended to save at least 10 to 20% down payment before you even start looking for a house, in order to avoid paying for the PMI. If you don't have enough saved up, or simply can't afford to put down 20% with your existing source of income, it's best to stick to renting while coming up with a way to generate more money. Number 2, take a look at your credit score. Your credit score is more impactful than you think, and when it's significantly low, it can tip the balance in the direction of renting, especially in expensive housing markets. So, one of the most important things to do before taking a step towards home ownership is to check your credit rating. It not only determines whether you're eligible for a home loan, but also decides the interest rate you're charged on the mortgage. Number 1, pay off all debt and build an emergency fund. Regardless of your intentions and how ready you think you are to own a house with your current employment status, it's necessary to have enough emergency savings in your account. Most financial advisors and planners suggest having the equivalent of at least a year's worth of basic expenses in your savings account, just as a safety net in case of a sudden job loss or huge unexpected expenses. If you're unable to deposit enough into your savings account, you may want to wait for a more stable cash flow to reach your saving goal before looking for a house to buy. Also, you're struggling with debt of any kind, you might want to steer clear of yet another one. On top of owing money to creditors, taking on a substantial mortgage debt can put you into some serious financial problems later on. So it's wise to get rid of your pre-existing debt first before thinking about purchasing a house. That's a wrap for the best home buying advice that will surely help you tackle the process of becoming a homeowner. Put these into practice today so that your new home is a blessing, not a burden.